The U.S. Securities and Exchange Commission is preparing a new regulatory framework that could allow tokenized stocks to trade on decentralized platforms. This move represents a major shift in how digital assets interact with traditional financial systems. According to Bloomberg, the SEC is expected to release an innovation exemption as soon as this week. The exemption could let digital tokens tied to public company shares be traded on decentralized finance platforms, even if those tokens are issued by third parties without company approval. That's a significant change from the current system, where tokenized trading has mostly been confined to regulated exchanges. The new framework could allow crypto platforms to offer onchain trading of U.S. equities without requiring full broker-dealer registration in certain cases. Regulators are adding guardrails to the exemption, including exposure limits, disclosure rules, and conditions that emphasize the program's temporary nature. If platforms fail to pass these requirements, such as denying token holders voting rights or dividend access, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. They could lose eligibility under the proposal. Regulators are reportedly considering restrictions on platforms that omit these shareholder rights. This exemption is part of a broader initiative under SEC Chair Paul Atkins called Project Crypto. Earlier this year, the SEC approved rules allowing 2 national exchanges to list tokenized versions of select equities and ETFs through a depository trust company pilot. The new exemption is designed to expand on-chain trading opportunities for crypto-native venues and some DeFi protocols during a limited experimental period. The potential for tokenized stocks to move onto decentralized platforms introduces a new layer of complexity to U.S. financial markets. It could mean that investors can trade shares of public companies on blockchain-based platforms, bypassing traditional brokerage systems in certain cases. However, the exemption is likely to remain in place only temporarily, and the rules are expected to include strict conditions. The inclusion of voting rights and dividend access in the eligibility criteria suggests that regulators want to preserve certain investor protections. If platforms fail to meet these standards, they may lose the ability to participate in the program. The exemption also raises questions about how tokenized stocks will interact with existing market structures. Will traditional exchanges lose market share to decentralized platforms? Will new types of financial products emerge from this regulatory shift? These are open questions that will need to be addressed as the program evolves. The move reflects a broader effort by the SEC to adapt to. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The growing influence of blockchain technology in finance. While the exemption is still in the early stages, it signals a willingness to experiment with new market models. Investors and market participants will be watching closely to see how this framework is implemented and whether it leads to broader adoption of tokenized assets in DeFi ecosystems. The next signal to watch will be the official release of the exemption and how it is received by both the crypto and traditional financial sectors.